What's going on, YouTube? Did you know that most high earners are living paycheck to paycheck?
62% of Americans live paycheck to paycheck, including 44% of those earning over $100,000 annually. High income doesn't equal financial security. Even households earning $200,000 or more report financial anxiety and lack of savings. The problem is lifestyle inflation and rising costs outpacing wage growth.
And here's the reason why. In this video, you'll find out. And about 51% of high earners are living paycheck to paycheck. And here's some articles talking about people with high earning living paycheck to paycheck. Now, that's not a surprise, right? 61% of Americans live paycheck to paycheck, and high earners are not excluded from it. And here's the thing I want to tell you is how to break that cycle in 2026. Now, on the screen, I'm going to give you a breakdown on how much $100,000 is actually broken down so that you can see it and understand first what is six figure actually bringing you in. Because if you don't make six figures, you don't actually know how much they're bringing in. So let's do this breakdown so you can see it. So on the screen, $100,000 salary breakdown is much easier to live off than $20,000 a year. We all can agree to that. But how much is it really? Monthly income, it brings about $8,333, and bi-weekly it brings about $3,846. And keep in mind that it depends on your tax bracket and everything else that do it, your deduction. But the biggest part is you're bringing in about $8,000 a month if you have no deduction or anything else, and depending on what state you're in. That's a lot of money. And they're living paycheck to paycheck. Now, there's a lot of reasons why people are living paycheck to paycheck, and it's a combination of these things. And in this video, I'm going to tell you the reason why so you understand it. So the first reason why is lifestyle inflation. A lot of people start making money and start spending money stupidly. At the end,
you make $200,000 and still live paycheck to paycheck? Well, after taxes, my take-home pay is only $127,000. That's still a lot of money. Subtract $1,000 for health insurance. Mortgage is $5,000. Utilities and home expenses are $800. Car payments are $1,000, groceries are $900, fun stuff is $1,000, gym is $150, kids' activities are $250, and other bills are $500. So you have nothing left to save or invest. Nope, it's called lifestyle inflation. The more money you make, the more money you spend.
You cannot out-earn stupidity. If you go out and you get a paycheck of $500,000 a year, and then you decide to buy a bigger house, a fancier car, more dining out, that'll consume more money. That means you're going to have less money. That's going to cause you to be broke. You cannot do that. Once you make more money, you have to learn how to handle it. That it doesn't matter if you have a small amount or a lot amount of money. If you don't know how to handle it, you are going to stay broke. And this is something that this is why financial education is important. Now, the other reasons why some of these people are broke is the high cost of living. Yes, inflation across the board is causing essentials like housing, healthcare, childcare eat into your large paycheck, especially in your expensive area. So lifestyle inflation, high cost of living are a great example of why they cannot live off their paychecks and they're falling behind or living paycheck to paycheck. Now, we got those two out of the way. The other three that are going to be variable depending on the person is the debt burden. A lot of high earner often carry substantial amount of mortgage, student loans, and credit card. And this is straining their monthly expenses.
When I was in middle school, a song came out called Mo Money, Mo Problems. And I think that that's true. Your problems scale. You still are dealing with a finite number every month. Your worries, your anxiety, your budget scales to that. You still are dealing with a ceiling.
About 14% of all U.S. households make $200,000 or more every year. But many of them dubbed Henrys, or high earners not rich yet, still don't feel rich. 62% of people with salaries over $300,000 a year struggle with credit card debt.
So if you want to have all this debt looming over you, and Americans have made it a normal thing to have debt, and it's not normal. You shouldn't have debt. You shouldn't have all these problems. So at the end of the day, banks normalize it. They give you all these loans. They give you payday lending. They give you buy now, pay later. And this is causing you to be paying interest and paying the middleman money that you should not be paying. At the end of the day, it's causing you to be poor. The fourth reason why is poor financial habit. No budgeting, tracking your spending, or lack of understanding financial priority is causing you to be broke. Yes.
If you want to be wealthy, stop doing the one thing that keeps 99% of people broke. Chasing comfort before freedom. Most people work hard, get paid, and instantly look for relief through spending. New phone, new shoes, weekend distractions.
This is a habit that I see a lot of people. I know a lot of people who is a high earner, and I ask these questions. It's very uncomfortable to ask them. I'm going to tell you, it's very uncomfortable. But I ask these questions to see how people are doing financially and have an understanding how they're investing and how to improve their life. And last one that's causing them to be broke is equating income with wealth. At the end of the day, high earner isn't the same as wealthy. Without saving investment, high earners can feel financially secure.
I know a guy making $200,000 a year and only has $500 in his bank account. High income doesn't mean wealth. Investing does. I make less than him because I invest. I'll be richer in 10 years than this guy will be.
Until they get fired. I've seen a lot of these people with tech jobs making $200,000, $300,000 a year get laid off, and now they're living back at home because they can't afford their current lifestyle. They're living paycheck to paycheck. And this is just the reality of it. Now, here's some interesting facts before I go into how to break the cycle. Is Goldman Sachs report that found that quarter of workers earning over $100,000 live paycheck to paycheck, with 40% of them making over $300,000 a year. That's a crazy amount. And Harris Poll's survey showed that 3/4 of six-figure earners use credit cards as cash for shortfalls and feel they need to double their income to be more secure. At the end of the day, you aren't doing your due diligence and it's causing you to be broke. Now, let's talk about how to break the cycle. So, how do you break the cycle living paycheck to paycheck? Very first thing you need to do is get on a budget and track your spending. You need to know where your money going and what areas you need to cut. Why is this important? Well, if you don't know your budget, you don't know how much you're actually bringing in, you don't know how much you actually can spend a month. I'm not saying cut all your expenses and live off of beans and rice, like what Dave Ramsey said. Well, I'm saying cut your budget all the way down until it meets your salary at the bare minimum, and it gives you a comfortable place so you can save and pay off debt. That's how you break the cycle. Now, the second thing you need to do is build an emergency fund so that you can create a buffer so you do not have to use the credit cards. Credit cards are paying 23% interest. Payday lending can charge you almost as much as they want. It's almost illegal how much they can charge you. And buy now, pay later is charging 36%. Stop making the middleman rich. This is an issue. Now that you understand these, how to get out of this issue is lastly, is prioritize debt reduction. Without paying off the debt, you are going to still be paying someone and still falling behind, because debt, you're paying money to a bank to allow you to borrow money. Yes, they need to be making money, but I'm telling you, you don't want to be making them richer. You want to make yourself rich. I don't know anyone that can get 30%, 40%, 20% return year over year in a stock market or housing. So Why are you borrowing money at that rate? When you do payday lending, you do buy now, pay later, you use your credit card, you are paying 20 to 30% on that money. So reduce it. Which method should you do? The Dave Ramsey method, the baby step, the avalanche method, whichever one you need. Now, I'm going to tell you, the avalanche method is the best way if you want to save money on paying off debt. But the baby step is the best one to do for the average American. Why? Because it gives you gratification of paying off your lower credit card first. It's a mental thing. So that's how you beat the debt cycle. That's how you get out of living paycheck to paycheck. Like and subscribe to my video, and that's all I got for you. Hopefully this helps you and you learned something new today, and hopefully you stay out of debt and get your life in order.